Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Tuesday, August 1st, 2023. Before I click on all the charts, just want to encourage you to please click like if you haven't already, and subscribe to the Wicked Stocks YouTube channel, and share the content if you would with friends and colleagues. And please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Apple report. Daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, the long bond ETF, that is the TLT, as well as 2 individual stock picks a week in 5 to 10 minute video format that cater to both the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves on those underlying stock picks. We also offer a 5-day free trial up front with your subscription. So if after 5 days you don't like what you see, you can bow out and there's no cost to you whatsoever. So on to Tuesday's daily Apple report. I'm going to click on this chart first and just remind you that several months ago we settled above a long-term channel top that is presently at 169.17, anticipating possibly by the end of the year 223.76. This is considered the target. The question for me, of course, is will we reach it by the end of the year? And we may well, given the way things are playing out. On the interim, we've got this sort of midterm channel dynamic that is 204.02 ceiling, 191.71 floor. We tested the ceiling about a month ago, came off of it. Every time we test one or the other, the floor, the ceiling is then in reach within several weeks, and the ceiling, the floor is in reach within several weeks. And we could trade inside of this band for the next month or so. Ultimately, though, anticipating a settlement above 204.02, given that long-term buy signal. And if that were to occur over the next week or two, the 215.98 6-month, 7-month channel top then in reach within 2 to 3 weeks. And it is over the next 2 or 3 weeks that 215.98 channel top does converge anyway with our longer-term objective at 223.76. So as I've been saying, it could be just a mere settlement over the next week or two above 204.02 that over the following month or two only should then yield 223.76 as a met objective. And that is really kind of the big picture. This, once again, our primary support and resistance as we move into later August. I weigh more heavily at 191.71, a 4-star multi-week support level because of that long-term buy signal, and I weigh lighter at 204.02, just a mere 3-star resistance area. Yes, able to contain weekly buying pressures, but not surprised if over the next test we happen to settle above it, then setting off a 2 to 3 week buy signal up to the 215.98 rising channel top. So now let's take a look at kind of the day itself. I'm going to break it apart just a little bit here. A couple charts I want to show you. 194.87 I've weighted as the session containment level. Now, of course, we do have that 195.10 level that I've used now for the last week or so as our support level, and we did close above that for the first time last Friday. No strong follow through to the upside, but we are still nonetheless anticipating, bullish continuation. In fact, holding above 195.10, that 204.02 formation I showed earlier is likely, I'm going to say, by the end of next week. We do need to get up and underway, and I'll show that in a moment. But, for right now, it really is 194.87 is our floor of support, and above which 198.23 is possibly in reach today. 198.23 is that move high from a couple of weeks ago, and it is in reach today if we push through 196.69. 196.69, nothing more than the trend line off these highs. And so pushing through 196.69, 197.20 expected pretty quickly. That is the high from last week. 198.23 by the end of the day. If we push through 196.69, I would anticipate 198.23 intraday. And if we close today above 198.23, that is another short-term buy signal that I would expect to yield closing above 198.23, the 204.02 formation over the following 3 to 5 days. Possibly by Friday's close if we settle today above 198.23, but I think it'll take every bit of 3 to 5 days to reach it. 204.02, once again able to contain buying through next week, and if settled above, should then yield 215.98 and rising by the end of August. Let's take a look at the downside once again, and we have the 194.87 level. That is a session containment. If we break 194.87, might we test 191.29? So you've got 191.29 here. I don't even show it in the support and resistance because I've got 190.03. And where's a better way to show it? Do I show it? I thought I showed it. Bear with me. There it is. 190.03 to 191.71. And inside of that, I do have that 191.29 level, which is right here. So, I don't like to crowd these things. It really is kind of a wide range right now. I might change that just a little bit because I really like the longer term formations in terms of the signals than the near term formation. In other words, like closing below 191.29 today, and I don't see it happening. I think that there's a very good chance that could be the sell signal into later August. But for right now, I'm going to stick with 190.03. That's kind of a slippage factor below 191.71. Spending a lot of time on this on an area that we're probably not going to see today. But I will once again mention that if we close today below 194.87, I do think that over the next 3 to 5 days, by the end of the week, we can fall into this 190.03 to 191.71 region, where once again, we could bottom out through August, and once tested, we could reach this 204.02 area within several weeks. Once again, it looks more like this. And finally, in terms of are we going to fall into the 170s, for instance, over the next few weeks? That really doesn't come into play unless we were to settle today below 190.03. And then, any out-of-the-money calls that expire over the next month, I would suggest covering them sooner than later and perhaps reaching for 178 or 180 out-of-the-money puts that don't expire for at least a month. That would be the play. But until then, and I guess this will be the last thing that I will say, that if we dip into the lower 190s over the next few days, you might reach for 205 or 206 out of the money calls that don't expire for at least a month. Or you might then, even as I was saying earlier, if we were to break into the low 190s, you might then reach for 225 or 230 out of the money calls that don't expire for at least, I would go 6 months out on that. I think I have pretty much laid it out pretty well for the day for Tuesday's Apple Report. I'm going to leave it at that. I'll be back tomorrow. Please click like, share, subscribe, and check out wickedstocks.com. You have a great evening.